In this video, I'm going to cover my exact day working as a hedge fund investment analyst. Hi, I'm Burak. I've worked as an investment analyst at 2 different hedge funds here in Mayfair before becoming a quant trader at a high frequency trading firm. I'm going to take you through my exact working day broken down hour by hour and show you exactly what life in the front office of a hedge fund really looks like. So whether you're considering a career working at a hedge fund or just curious what happens behind the scenes, this video will give you a clear picture. Let's get started with how the front office of a hedge fund is actually structured before I talk about my day. In a long-short equity hedge fund, at the top you have the chief investment officer. Then below them you'd have the portfolio managers, and then finally at the bottom you'd have the investment analysts. This is basically the P&L generating side of a hedge fund. In the front office you also have the traders, but usually at a hedge fund, traders are just there to execute orders. So they're not usually the P&L generating side of the front office. So depending on the size of the hedge fund, it can be structured as like a platform where each portfolio manager is running different strategies, even under the same umbrella of strategy at the top. To give you an example, in a long-short equity fund, you'd have different types of sub-strategies. You'd have like fundamental, event-driven, merger arbitrage, etc. And they all basically fall under the long-short equity strategy. And then sometimes you might even have a strategy on top of strategies, which is basically like you're capturing alpha internally, which is called internal alpha capture, etc. Then you obviously have the middle and the back office, but this video is going to be more applicable to the front office. In this day, we're actually going to focus on like an earnings period, as that's the most busy part during the year. Those 4 points, the earnings seasons, are the most busy parts of the hedge fund. And for reference, I worked at a long-short equity hedge fund. So I wake up around 5 a.m. in the morning and try and get into the office by 6:30 latest. Around this time, it's usually just the investment analysts and also the traders that come in. And this would usually give me enough time before 7:30 when my portfolio manager comes in. This block of time in the morning is actually a crucial point in my day. Basically, I read up on sell-side investment reports. So investment banks in the US will publish reports overnight. I'll put one here, like equity research reports, and it gives me enough time to basically read all those reports, look at the ones which are going to affect our portfolio and what it would mean for the day, and just synthesize the news into an email that I would send to my portfolio manager as he's commuting into the office. This is basically a quick read on if there is overnight changes. And usually there's 2 things. So if a company publishes their earnings, there will be instant reports highlighting the news from the investment banks. And then finally, a couple days later, they would update their models and then send another report. Also on their reports, they would update their ratings. So like JP Morgan might call it like overweight, underweight. Different banks call it different things, but basically just means a long short. It's either good or bad. And that is obviously crucial into taking on their opinion. Doesn't necessarily mean that the hedge fund agrees, but it just is a point of reference what that bank thinks about that stock. And then he would usually get in around 7:30 before the open at 8. And we'll quickly discuss the open to the market and if there's anything that we want to do on the open. This is usually a bit more of the fast-paced part of the day. There isn't so much slow, deep work, and we don't really do much with the actual reports at this point, so we don't update our models just yet. We'll come to that a bit more later in the day. From 8 till 10, my portfolio manager, myself, and the other analysts are basically on desk, monitoring the market. And if it's an earnings season, we would be jumping on conference calls, listening to all the news from the actual stocks that we're interested in, also hearing the Q&As that happens after the conference calls. So investment banks, the equity research department analysts, which look at specific sectors, would go to these conference calls and ask really insightful questions about the industry, about the company, etc. And we would also take notes on that and synthesize all of that information as well. So 10 till 12 is the first chunk of day where I can do deep work. My portfolio manager, depending on how busy he is, he might be on meetings, etc. And this is the point where investment banks actually start to publish their updated reports, and I will synthesize their own reports and update my own models using the research depending on how insightful I find it, etc, etc. Again, the portfolio manager might be sending orders to the traders to execute for the portfolio during this period as well, if we want to do any orders in the middle of the day. Then from 12 till 1, I would usually run outside, grab lunch and come back. Obviously, I eat on the desk. That's very common across hedge funds and finance in general. Then from 1 until around like 2:30, now this is another chunk of the day where I do deep work, but it's less so on updating models and actually on 2 other things. So I would either focus on idea generation or hedging strategy. So firstly, idea generation. So one of the key roles of an investment analyst is actually idea generation. So you're expected to pretty much apply the portfolio manager's strategy to try and synthesize new ideas to invest, go long, short, etc. So A key part of my day is to generate these ideas. This is obviously done using software to find ideas, etc., what we might be interested in, to basically pull companies that is of interest. So I would pretty much pull a bunch of these companies, do a very short report on it, like a page, pitch it to the portfolio manager. If he's interested, then I'll flesh out the entire idea, build the financial models, etc. Usually in a typical day, this might be 2 to 3 new ideas. And then finally, the other part is actually hedging. So the portfolio might need some positions to be decreased depending on the change of our view. So if we're long or if we're short respectively, and with the new updated models, as I mentioned, we might decide that we might actually want to start decreasing some of those positions. And that's also another key part of this part of my day. The reason 2:30 is a key point within the day is because we're a UK-based hedge fund. At 2:30 is when the US markets open, and that usually affects pretty much all of the financial markets across the globe. It's pretty much one of the more volatile and high volume points within the day. So usually the portfolio manager would definitely be present for the open. It's a very significant part of the day. And a unique part of working at a hedge fund within Europe, especially if you're focused on European equities, is the fact that the closing times for different markets across Europe will be different. So that is a unique part of working at a European hedge fund, is that different countries, so for example, Greece, Sweden, UK, you're going to have different closing times because they obviously have different markets. And so this 2:30 to 5 is actually quite a significant point, because if you have like Swedish stocks, then you have to be aware of the closing and opening times of that market with respect to everything else. So if you want to send orders, then you have to align that in time to not basically miss the close. And 2:30 to 5 is basically all hands on deck. The portfolio manager's there, I'm there. We're basically, if there's any orders that the PM, portfolio manager, wants to send, that's when we could do it. He or she might decide that they want to send orders in, let's say, the auction, which is the end of the stock market. So at this point of the day, it's less deep work and more so reflecting and concluding all the work that I did for the day, for the week, etc., the modeling updates, and just concluding on whether we need to do any adjustments. Around 5 o'clock is when pretty much all markets across Europe close, and that's when the portfolio manager might step off the desk. I'll pretty much spend like 5 till 7 either modeling. So if I have any extra modeling to do, if it's a very busy day, I might be modeling, or I might actually be just catching up with the traders if they're sitting in a different part of the office. I might just catch up with them, talk about the day, get some color on the street on the sell side, because they're interacting heavily with the sell side traders. So I just pretty much catch up with them and just get some color on the street, etc. And so around like 6, 7, that's when I leave the office, depending on how busy it is. And so like buy side obviously has better hours than like investment banking, etc. But it's still like solid 12 hours of working, excluding commuting, etc. So it's quite busy, and especially busy during earnings periods. Obviously, when it's not earnings periods, that's going to be much quieter, and there'll be much more deep work, modeling, etc. that will be done. But during earnings season, it is very, very hectic, as we're updating reports, we're talking with sell-side analysts, we're talking with the companies, etc. So there's a lot of things happening very, very fast. That's everything from me for today. If you have any questions about anything I spoke about, or if you have anything that you're interested in, please let me know in the comments, and take care.